How's it going, everyone? And welcome back to Continues to Tick. I hope you all managed to make it through yet another week. Mine went fairly okay overall. However, sometimes it's just hard to shake it off, or break that feeling of the mundaneness of going into work every day, clocking in, clocking out, 5 days a week, for 8+ hours on end, doing something I necessarily would rather not be doing for the majority of my day, every day. I wonder how this all makes you feel. Now, don't get me wrong, I'm extremely thankful to have a job and even more appreciative to have a career that is very good to me. But there has to be a better way, right? Right? Life's too short. And whether the clock works or not, time passes for us. Investing helps. Making smart financial decisions help. And so does driving a 2001 Toyota Camry. But conservatively speaking, at least in my case, another 23 more years to go. Or as I like to say, another line on the chalkboard. You may be thinking, Jesse, what was that whole intro for? Oh, that was just me complaining. But I'm able to shake that off now. And you know what? We're gonna keep moving. Anyhow, we all have some odd energy from time to time now. That is life. And part of the beauty behind it. We are able to feel what we feel. And in speaking of feelings, I'm not sure exactly what may have happened, but we got a few more joining the journey of Continues to Tick from this past week. So not only did we get paid $37 in dividends this past week, which I'll show you all soon, we also gained 35 more subscribers, which I believe is actually more valuable than the dividends. So anyone new here, welcome. And as always, thanks to those that continually watch. This is all a work in progress. So is our life's journey, our dividend portfolio. So is this story. So as you saw by the title, in this week's video, I'm going to start a new series in which I begin to go over each of my sectors, one at a time. I know I'm about 65 videos deep now, and maybe you haven't noticed, but I'll never be a YouTuber that tells you what I'm buying, tells you what I'm selling. I recognize I'm nowhere near qualified. My strategy isn't to outsmart the markets or rush the process of building wealth. I'm big into conservative play, rather than bet on things outside of my control. The one thing I do have a tendency to bet on is on myself, such as changing jobs, maybe starting a side hustle, changing the oil on my old ass car rather than take it to a shop, things like that. My opinion is that fast tracking the process to wealth increases risk and often in the end doesn't help. If we all knew what the markets would do, we'd all be financially independent and retired in our 20s and 30s. Which is not the case. My strategy is first and foremost to use time. Use it as the strong tool that it is. And with that, I buy and hold respectable blue chip companies that pay a dividend, reinvest every bit of it, and that's it. And if you haven't noticed, I set my portfolio at 51 holdings and only continually buy within those 51 holdings. I don't add anything new, nor do I sell often. And I can explain why in a future video. But to summarize it simply, remember in this journey, my financial strategy is one thing primarily, and that is to use time, followed by consistency. I'm a believer that once putting in the time, consistency leads to progress, and progress leads to results. Another thing I'd like to mention is that as I know I'm not qualified to provide financial advice, the way I pick stocks is how a regular person with some self-taught financial knowledge would pick a stock. I look at bigger pictures and trends, and the overall feel of a company. And a big note, I only invest in already proven companies. I also ask myself, what does it provide? Does it have competitors? How long can it ride out its current success? Can I see it expanding? Can I see it wanting to evolve for the future? Things like that. I ask myself these questions, rather than looking really deep into the statistics, technicals, or the chart movements and patterns behind these companies. I will say at times looking at a PE ratio is also helpful, but for the most part, I only really look at two statistics, or charts, and I'll show you those here in a moment when I break down my tech sector. So this is my tech sector. In the Jesse's cash flow portfolio, I have a total of 6 holdings. I have Nvidia, Apple, Visa, Oracle, IBM, and Cisco. And just starting from the top here, let's start with Nvidia. So one of the primary tools that I used when choosing a stock was actually just going to Seeking Alpha and using Seeking Alpha to do my research. So as you can see here, I already typed in Nvidia, and this website's really helpful, especially when it comes to looking at a lot of the information behind this company or any company that you actually search for. If you scroll down below here, it tells you a little bit about the company. For those that don't know, Nvidia is like a pretty big tech company. It's a worldwide company, as you can see here. They're really known about their chips, and they also have a partnership here with Google Cloud. I'm not super knowledgeable when it comes to the tech sector, but you can ask a majority of people and they would tell you that tech is the future. I mean, just look at your smartphone. It's like a computer in your hand now. But the things that I'm looking for when it comes to actually choosing a company, such as in my tech sector, as I mentioned, I look at two charts. The first one is just a growth chart. As you can see here, it's already on the 1 year mark. I want to see how it's growing over time. Just kind of going through it. You can see it's been climbing, and the overall trajectory is really good. And another thing I look for here on Seeking Alpha is going to the Dividends tab. You go to Dividend History. You can zoom out a little bit here. And just looking at the Dividend History chart, you can see the 5 year, the 10 year, and the max. So this stepping stone is kind of what you want to see. You also want to see no dips in the stepping stone. And if you look right here, it also says Nvidia has been paying a dividend consecutively for 8 years. So the next one here in my portfolio is Apple. So let's go ahead and take a look at Apple in the same way. So here's Apple's growth chart. The 1 year mark, the 5 year mark, 10 years, and the max. I'm sure we all know Apple. I can't imagine one person who doesn't know Apple. When I think of Apple, I think of the future. I think of tech. I think of all the areas in which they've already expanded to, such as streaming, going into health with their Apple Watch, their health monitoring applications, their line of credit even, getting into their credit card and Apple Pay. They're definitely a juggernaut. And I think of them when I think of the future. So Apple, kind of like Nvidia, there was just two of the more easier ones to select. Both of them had a pretty small dividend yield, but thinking of a dividend growth portfolio, your tech sector is usually going to be the growth in a dividend growth portfolio. It's kind of hard to select a tech style company for a dividend portfolio with the assumption that you're going to get a lot in dividends. That's usually not the case with the tech sector. But clearly the growth chart is there. Looking at the dividends, let's look at the dividend history and the 5 year, the 10 year, and then the max. So there's the stepping stones that we want to see and the consistency. And I believe these were stock splits as well. So there's the growth and the dividend growth portfolio. And as you can see here, Apple has been paying a dividend for 9 years consecutively. So the next one I have here is Visa. Visa is like the payment company. It's also really into tech, which I initially didn't think of when I thought of Visa. I just thought of payments. I never really thought of Visa as a tech company. However, the more I started to research into Visa, I did realize it kind of was a tech company, and it was categorized as such. If we scroll down below here, you can see Visa's company profile, and it states here it operates as a payments technology company worldwide. It facilitates digital payments among consumers, merchants, businesses, strategic partners, and government entities. And I believe they're also trying to get into cryptocurrency or the blockchain, which will be interesting to see. But if we look at their growth chart here, we see the 1 year, the 5 year, 10 year, and then the max. Very nice trajectory. A lot of nice growth. And that would lead me to assume that moving forward, considering this is a tech company, considering they're a company that stays with the times, I could see them evolving. I could see them wanting to evolve and stay around. So Visa for me aligns with that future vision, and it was an easy one for me to kind of select after I did my research. And looking at the dividend history here, you can see the 5 year, 10 year, and then the max. And you can see the stepping stones here. They even had a stock split here. Visa has experienced a lot of growth. And if you look up here, they've been paying a dividend for 12 years consecutively. And I see that continuing going into the future, moving forward. So this is where it starts to get a little interesting. So I have Oracle, IBM, and Cisco. Nvidia clearly has been exploding if you've been watching the stock at all over the last year or 2 years. And Apple is Apple. It's a juggernaut. Visa is everywhere. But now these next three, it starts to get a little interesting. I have a somewhat different rationale when it comes to these three holdings. So here we are at Oracle. For those that don't know about Oracle, It's another pretty known tech company. I consider it one of the OGs. It offers various cloud software applications, and I'm not super big and knowledgeable into tech, but Oracle is one that's been known for a while in the tech sphere. And like I said, I refer to it as one of the OGs. It's just been around. The name's been known for a while now. If you were to ask me, just for me to be transparent, what does Oracle, IBM, Cisco, what do they do? I can kind of briefly tell you, but for the most part, I wouldn't be able to tell you. I mean, I just know it's a tech company. I know it's been known. And that's the thing about investing. It's hard to know everything about every single company. Do your research once, look into it deeply, and just know what you're investing into. See if it's something that for you personally, it's worth holding on to. But just as we've been looking at the charts previously, here's the 1 year, here's the 5 year, here's the 10 year, here's the max. So overall, it's a pretty good trajectory that we see here from Oracle. It's been exploding. It's been doing really well. So the chart growth looks good. It's one of the things that I look for. Let's look at the dividend history. So the 5 year, the 10 year, the max. So we see the stepping stone. But yes, you do see a drop here. They didn't pay a dividend for a little while here, as you can see. They suspended it. And then sure, they came back stronger, but they did suspend it. So it's something that when I was choosing these tech companies, IBM for example, it was one that made me have some doubt. That's why I'll show you at the end why I have it set for a lower allocation for the portfolio. I still believe in Oracle, primarily because I know tech is a really big sector, and it's hard to know which ones will be the actual winners at the end. I believe Oracle has the tools and it's been around for a while, and I believe it's fighting to stay relevant, and I believe it will continue to. So for me, when I looked at Oracle, I did see a gap here, but then when I went back and I looked at the growth chart and I saw that it was climbing, and I saw that it has been climbing, those are the trade-offs. It's like pick your poison. For me, personally, and my tolerance, it made sense to hold Oracle. The next one I have here is IBM. So IBM is somewhat similar to Oracle, the way I see it. It's kind of known for their cloud service infrastructure, and that's kind of where I leave it. I know it's kind of another one of the OGs, and I do believe reading that IBM is trying to get into the blockchain. So moving forward, I think they want to stay relevant, and I know they've had some times of struggle, as you'll see here on their growth chart. But one of the primary reasons why I'm holding it is because it is one of the OGs. And as you can see here on the max growth chart, I mean, considering where it started to where it is, looks good, right? But, you can see some dips, some climbs and some dips. And the overall trajectory, it's kind of hard to predict which way it's going to move. Another thing to take into account that this company is one that actually pays a higher dividend yield at around 4%. So let's take the 4% dividend yield, considering it's an OG tech company. The growth is kind of there. It's kind of hard to predict, which way it's going to go. But now let's go into the dividend history. So the 5 year, the 10 year, the max. That looks pretty good to me, right? When it comes to dividend history, you see the stepping stones, a long one at that, and a really good looking one. You could also see up here, it's been paying a dividend for 32 years consecutively. So when it comes to an OG tech company, a wishy-washy growth pattern, right? It does have a dividend yield of 4%. It does have a consecutive dividend paying streak of 32 years. Again, it's like bringing up that argument, pick your poison. It's like I can go more into Nvidia, I can go more into Apple, but I want to stay diversified. IBM, Oracle, and the last one that I'll show you here is Cisco. So here's Cisco. I work for the state of California, and a lot of the technology that's actually in the state facilities is Cisco. But it designs and manufactures and sells internet protocol, based networking, and other products relating to the communications and IT industry in America, Europe, Middle East, Africa, various places of the world. The list goes on, right? So it's a pretty well-known tech company. It does a lot, and it's been around for a while. And if we look at the growth chart here, the 1 year, 5 year, 10 year, let's look at the max. The growth chart, despite this initial burst here, it looks pretty good. It's somewhat slow and steady. The trajectory is overall positive. It has about a 2% yield, dividend yield. And then if we go into the dividend section here, look at dividend history. If we look at the 5 year, the 10 year, and then the max, you see the stepping stones, right? You do see a gap here. You do see one gap here though. So they had a little break. Again, it's like pick your poison. And they have a consecutive dividend payout streak of 10 years. So picking dividends is really not that easy. You kind of have to pick and choose. You have to pick your wins, pick your losses. When it comes to Cisco, They have a pretty nice stepping stone pattern for their dividend history. They've been paying out a dividend for 10 years in a row. They have a dividend yield of 2%. Overall, when it comes to their growth pattern, it's slow, but it is steady, and it looks like it's on a steady incline. So now let me summarize my tech sector here real quick. So when it comes to my tech sector, clearly, I have my favorites. I have Nvidia set at 28% of my portfolio of the tech sector. I have Apple set at 30%. I have Visa set at 18%. So these are my three that I'm running with. But I wanted to have some OG tech companies. I ultimately wanted to see if these are future proof. And I really couldn't choose between the three of them. One, two, I couldn't choose. So I just chose three. I chose all three. I was like, let me just be diversified. So I got Oracle at 8%, IBM at 8%, and Cisco at 8%. So much lower portfolio allocation than Nvidia, Apple, and Visa combined. There have been thoughts in my mind to see, maybe should I lower it? But as you can see here, this is on the all-time charts. They have actually been pulling their weight pretty recently. And it's surprising because part of me almost wants to do Visa and increase this allocation. But as you can see, Visa is at 16% growth, whereas Oracle has exploded with 90% return. IBM with 30, almost 32%, and Cisco with 42, almost 43% return. So that's the importance of diversification. Another thing to note here in my tech sector is that I have Apple set as my biggest allocation at 30%. But as you can see here, Nvidia has been exploding. And despite having it at 28% set allocation, it's at 30.6%, and it just doesn't stop. It's really hard to know what the winner will be when it comes to setting up a portfolio, choosing your holdings, choosing a company that you think is going to be a winner. So in my mind, the best thing to do is just to be diversified. Be diversified. Play the safe route. Don't go all in on one company. Don't go all in on 2 or 3 companies. For me, I felt 6 companies was safe in my tech sector. And it's just a matter of letting time decide which ones will perform the best. So hopefully that was an interesting way of explaining that. I haven't done a video like this before, but that's somewhat, the thought process that went into deciding the tech sector holdings for my Jesse's cash flow portfolio. And just to wind down the video here, we'll wrap up with an actual portfolio review. So as you can see here, we're at 38,000. Our portfolio has been increasing. The market's tide has actually been turning. And as you can see here, it's led to a slight increase from our last week's review, with a total return of 32.46%, which equates to $5,250.64. And of this, $4,538 is from market gain, and from earned dividends, we're at $711.73. And of course, this is on the all-time charts. Just to take a look at our last week's performance, as I was mentioning, it went pretty well. As you can see here, it was a 1.40% return, which led to a total gain of the portfolio of $528.68. For market gain, it says it was $525, and from earned dividends, slightly under $3. And here we are in our dividend activity for this last week, where there's actually quite a bit to cover. We had quite a bit of action. We started the week off on October 12th, getting paid $4.01 from Omnicom Group. On October 13th, we had our $500 deposit, just like we always do, with a $6 snowball, $6.88. On October 14th, we had another dividend payout, $5.36 from Philip Morris, and then $3.97 on October 15th from American Tower Corp. Also on October 15th is a dividend payout of $6.37 from Avalon Bay Communities, and then Essex Property Trust of $5.42. And then we also had a dividend payout from $4.26, and Sempra Energy of $3.94. And then last but never least, a $4.18 dividend payout from Medtronic. So a total of $37.51 of dividend payouts. $37. And I think that's what it's all about, needless to say. So that's going to be it for this week's video, guys. Thank you so much for watching. And thank you so much for all the new subscribers here, joining the journey. And I'm excited about this new series. Today we covered the tech sector. With time, we'll go one at a time and cover each individual sector that I'm holding as to why and how it is that I'm holding a certain company. And I'm looking forward to that. And just remember, as we've made it through 7 days, we have a high chance of making it through another 7. And I'll see you then, as always. And as always, take care.